Welcome to Spidell's California Minute. I'm your host, Catherine Zidane, and this week we're covering the elimination of the SDI wage-based cap and what you can do to prepare for this new tax increase on wage earners. At Spidell's 2022-2023 Federal and California Tax Update, you'll get worksheets, charts, and client letters to explain tax law changes and planning opportunities to help your clients take advantage of available tax breaks. You can register for live or webinar sessions at caltax.com. SB 951 repeals the wage ceiling for contributions into the California State Disability Insurance Fund effective January 1st, 2024. This means that starting in 2024, all California wages paid will be subject to the SDI tax. For 2023, the SDI rate is 0.9% with a maximum wage base of $153,164 and maximum amount to withhold of $1,378.48. Starting in 2024, wages in excess of that 2023 wage base will be subject to the SDI tax. If the SDI rate remains at 0.9% for 2024, a taxpayer making $250,000 a year would be subject to an additional $859 in tax in 2024. For taxpayers making $500,000, the increase will be an additional $3,122 per year. For most wage earners, the increase will be unavoidable, but corporate shareholders may have two options to minimize the impact of this tax increase. First, the shareholders may want to consider increasing their distributions rather than their wages, as long as their compensation still meets the reasonable compensation test. They'll also want to factor in the impact this will have on any Section 199A deduction. Second, sole shareholders can opt out of paying SDI taxes. Under California law, an officer of a private corporation who's the sole shareholder or only shareholder, other than his or her spouse, can elect to exclude themselves from SDI coverage for contributions and benefits by filing EDD Form DE 459. The exemption applies only to SDI and not to federal or state unemployment insurance taxes. The exemption goes into effect in the calendar quarter the DE 459 is filed and is irrevocable for the remainder of that calendar year and for at least the two succeeding complete calendar years. After that, it remains in effect until withdrawn, although any changes in the stock ownership of the corporate officer may terminate the exemption. Previously, many shareholders who could have opted out of SDI coverage chose to pay the SDI tax because the amount of the SDI tax was cheaper than buying disability insurance on the private market. But now that the wage-based cap will be removed, this may no longer be the case. This will be an important conversation to have with your corporate sole shareholder clients during next year's tax planning meeting. We ran a longer article on this topic in the December 2022 issue of Spidell's California Tax Letter. For subscription information and to download a sample issue, go to caltax.com and click Publications. That's all for this week. Join us next time for another episode of Spidell's California Minute.